Morning, Steve Free in Chicago with the morning grain comments. Markets continue to trade higher in the grains overnight. We're taking kind of baby steps because there's just a lot of unknown as the supply for the U.S. Corn and soybean crop. A lot of numbers Tuesday morning, and so we'll kind of go through them real quickly. Yesterday, weekly wheat exports are running 6% ahead of a year ago, and USDA is calling for a 5% decline. Corn exports 6% behind. USDA is calling for a 10% drop, and soybeans 26% behind, with the U.S. talking about a 20% decline. Winter wheat harvest is 15% done versus 39% a year ago, and the crop is still rated 61% good to excellent versus 64% last week and 37% a year ago. Spring wheat crop is rated 75% good to excellent versus 77% last week and 77% last year. Corn plantings 96% done. Corn was rated 56% good to excellent versus 59% last week and 77% last year. And soybeans are 85% planted, and the crop is first crop rating 54% good to excellent versus about 73% a year ago. From a weather standpoint, U.S. Midwest weather should quiet down significantly over the next 10 days, at least with smaller areas of rainfall working through the region. 11 to 16 day also has some ridging sliding in to the west, leading to a weak northwest flow to dominate the Midwest, which will lead to average to below average temps in the north, below average rainfall for much of the Midwest. Funds yesterday were buyers of 7,000 wheat, 8,000 corn, 8,000 beans. We now figure that they're long 26 wheat, long 124 corn, and short about 56,000 beans. So now the debate is on acres, yield, and production. And the USDA said in June that there would be 89.8 million planted acres, 82.4 harvested. 166 yield would give you a 13.7 billion bushel crop. We have one agronomist who's out there saying that he feels that we'll have 85 million planted acres, a yield of 160, which give us a 12 billion bushel crop. The problem is that some people say we might see somewhat of a limited rally, maybe to the 540 area on D's corn, because of so much global supplies, and our export demand could drop because of the competition from South America. Over in the beans, the USDA's got 84.6 planted, 49.5 yield, and a 41.50 soybean crop. The same agronomist could see acres at 82 and a yield of 45, which would give you a 3.6 billion bushel crop. So again, that would bring us down to maybe a 600 or 700 million bushel carryout in beans, and still would be adequate given the large global supply and the fact that Chinese are not buying U.S. soybeans. As we go into the G20 meeting, it sounds like the President of the United States wants to take a hard stance. He wants some consideration on some of the key issues before dropping tariffs. If he doesn't get that, he'll put tariffs on the remaining $325 billion worth of Chinese goods. Friday's USDA report is expected to show the drop in corn acres that the market is trading. We also expect that might be a small increase in bean acres as the data was taken before June 1st when farmers were thinking about switching unplanted corn acres to beans. And we should show record high bean stocks as of June 1. And the farmer still has a lot of corn that he needs to sell. And what we're hearing is that he won't sell until pollination. But if everything goes well at pollination, he'll begin to sell that old crop supply. The worst crops right now are in Ohio, Missouri, in parts of Indiana, Illinois, and South Dakota. And so those are the areas that the market's going to be watching crop ratings, overall crop ratings, whether they improve or decline, and that'll probably push the market one way or the other. Again, I think corn market needs to trade higher. Beans and wheat might follow, but could be limited because of the lack of export demand out of the U.S. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.